Good morning. Welcome to Wake Up Real Estate. It is a Wednesday. And so we're going to be talking about mortgages and specifically a category of mortgage programs that being aware of and sort of having in your toolbox can help you do more deals. It can help you save deals. It can help you turn clients that maybe are on the fence or not even sure if they qualify into actively looking for and purchasing a home. And it's the concept or the category is no income or employment financing options. So we're going to dig into that in a minute. Jordan's going to share some different programs and what that looks like and how some of those work, and then even some examples. In fact, Ryan used one of these programs to purchase a home just a few months ago. And so this isn't like theoretical stuff. This is, we're actually using these programs to close deals, right? To close transactions. If this is your first time tuning in, please subscribe to the channel and smash the bell to be notified. Or if this is the first time you're listening on your favorite podcast platform, please subscribe, rate, and review. This before, I think I'm going to share this before and then after again. But the idea that we're covering today, we already have tools on the site, and even scripts on the site as well for you to use to generate more leads and even get into conversation with some of those leads. So I want to show you real quick. You can go and create a free account at wakeup.realestate, free account, wakeup.realestate, and under lead capture tools, if you go to mortgage lead capture pages, there are a whole bunch here that Ryan has built. Some of them has what I would say unbranded video content at the top. Some of them don't, but right here you can see no income, no employment verification. There is a lead capture page that you can already log into your free account and start to use, and then equipped with the knowledge that Jordan is about to impart with us, you can have an initial conversation and then turn those over to us if you're working with our mortgage team, or if you have another mortgage team that you're working with that has access to programs like these. Obviously, you can send them their way as well. So without further ado, Jordan, let's talk a little bit about no income or employment mortgage financing loan programs. That's a mouthful.
Absolutely. I like to break these up into. Am I muted? Oh no, that's my.
No, you're good.
Sorry. I need to get out of Zoom. I like to break these up into really three categories. Okay, primary residence. Okay, investment.
Yep.
And then crappy property, bad property.
Okay.
Essentially like a property that needs to be fixed up, right? Which is investment, essentially. But so what we do for primary residence, they're called no ratio loans. Okay. And it's essentially, it's built for that self-employed buyer, that person that maybe does make the income. Okay. Maybe doesn't have it all go through one bank account. Maybe it's going through multiple bank accounts. It's hard to trace their, asset, their income through a bank statement loan. And it's for someone that essentially writes everything off on their taxes. Okay. Those programs are typically 20% down or more with about 12 months reserves. Okay. Now
explain that though, Jordan. What does that mean?
Reserves?
Yeah.
Reserves are, they're essentially whatever the monthly payment is that you have stashed away in a 401k or a bank account or somewhere, right? It's cash on hand to be able to make that payment theoretically for X amount of months. Now, we can do cash outs. For example, let's say I'm doing a cash out on a property, a primary residence, and I want to cash out up to 80% or 70% or whatever it is, and I don't want to use an income loan. I want to use no income loan. Those cash outs funds can be used as reserves. The cash out itself can be used as reserves. So on cash outs, you don't necessarily need as many. But on purchases, you'll need a higher reserve amount. The second would be a debt service coverage ratio loan, or DSCR. That one's a much more popular loan with investors, because investors run out of room or running plane runway very quickly when they're buying up to 8 units. Even after 8 units, you can't do a traditional home loan anymore, typically with Fannie Mae or Freddie Mac. So DSCRs are really popular because they can still write off on all their taxes and still get those loans. Same thing, you're looking at about 20% down, 25% down. There is a income calculation technically on that. It's just based off the property. We'll have what is called a 1007 appraisal. And all that is just a market valuation from an appraiser on what that property would rent for. Okay, so they're going out there and saying, hey, this is this is going to rent for $1,500. As long as our payment's $1,500 or less, that would be a 1-to-1 ratio or better. Now, doesn't mean that we can't go less than 1-to-1 ratio. I do have a product that goes down to 65%, ratio, so it can only be 0.65 of whatever the monthly payment is. If the 1007 comes back, you just got to put more money down. You're looking at 35-40% down on those properties. More money down means they're, I also have one that's a no ratio with 30 to 35% down at 700 credit score. So it just depends on the property and situation, credit score on what they will allow there on those rent schedules. And then the last one would be fix and flip. So this is where maybe the property doesn't necessarily qualify for the term, like a DSCR no ratio loans. Those types of loans still have to be in a certain condition. Your kitchen can't be necessarily falling apart, or your house can't be falling apart. Can't be a terrible appraisal. So there is kind of a quasi way where you can do like a fix and flip loan or something like that, or a fix and hold loan, where you can go in with 0% down. As long as there's enough after renovation value there, it could be 0% down for you, to where you'll remodel that property and get into it without putting any money down, or get into it with no income. Okay. Now, with that being said, I want to use real life examples. Ryan was a real life example, right? On what we did with his, but we have a few others that we've done recently too. I've done it where I've had a client that they had a ton of equity, right? Ton of equity in their home. We did a cash out DSCR. They were wanting to buy a house for son and their son, because the son didn't qualify for an FHA loan. He had a great job, but he worked under the table for most of his life, and he'd just been on his current job for 6 months. So what we decided to do was cash out a property DSCR, and then turn around and have mom buy it as a DSCR purchase. So we cashed out all the money that they needed, turned around, and then bought the house. So there was actually two loans involved there, but they were able to get all the money. And mom was only on about $800 worth of Social Security a month. So we knew there was more income there with son. Son was going to make the payments, but essentially, she was going to rent it out to her son, and so we got that done pretty quickly.
So Larry says 10 years of reserves. I don't know if that's your program, Larry, but we have 1-year reserve programs like what we're describing here. Go ahead.
So there is one lender that just changed their guidelines to 10 years, but the lenders that we're not talking, we wouldn't use that lender. That's Change Wholesale recently changed their reserve requirement to 10 years. So you might see that out on the internet. That doesn't matter. We're a broker, so we just moved to a different lender. Exactly. So that one. I would personally use Champions is who I would use.
And I want to relate this back to something that Jordan talks about often when we're talking mortgage. If you had joined us for any of the past Wednesday afternoon sessions that we had done, which are all on the Wake Up Real Estate YouTube channel, there's a playlist for them, etc. 3 pillars. Yeah. This is an example where if we've got 2 out of the 3, we can make something happen. We have options, right? And the 3 pillars, Jordan, for those of you who need a reminder, or maybe you've never heard him talk about this, what are they?
assets, so money down, right? Credit, income, right? So typically, if you have two good
if you're strong in 2 out of the 3 areas.
Yeah.
Or,
if you're strong out of 2 out of 3 areas. So for instance, when I say strong, there's kind of an idea of what strong is. An idea of a strong down payment is 10% or more usually, right? So for example, if I wanted to do a 501 credit score, right? FHA, 10% down, good income, I can go down to a 500 credit score, right? We're missing the credit score pillar. The pillar, we have bad credit. DSCR loan, someone or no ratio loan, 20% down, no job essentially, right? No income, but good assets. 20% down and good credit. Typically, you want to see like a 700 credit score for those type of loans. 660 above, so on and so forth. So even DPA falls into this. Good credit, good job, no assets, the DPA, right? So it's a concept of when I'm trying to explain to a client and I'm really trying to explain, okay, how do we get there? We're targeting 2 of their pillars, right? It makes it easier for them to understand, right? Of what they need to develop a plan for a mortgage.
So just generally speaking, if you have 2 out of the 3, we likely have options. What we're talking about today is not having income or employment that is easy to document, right? Or said the other way, your income or employment is difficult to document. If you've got good credit and you've got assets in some of these scenarios can be equity. Can be equity in certain scenarios, right? If they have enough equity and if it's a refi or a personal residence, there are lots of ways to slice this up, I guess is the point. And just Jordan, go ahead.
I had a call this morning, literally this morning with a guy that's wanting to pull out some money for a DSCR loan or investment property, pull some cash out, right? We can't use income, right? He's a realtor. And a lot of times realtors write off their taxes. Anybody that's 1099 really write off their taxes, which I do. I'm not a tax professional, but I wouldn't pay a ton of money in taxes over, these products. These products are designed for these people, right? So I would absolutely, when I used to work for a retail bank, we didn't have these products. I didn't understand them. This was years ago. And these weren't really that popular back then. I would be like, oh, you got to change your taxes. Today, I would never do that. Right. It'd be definitely something that we would look at the differences and talk to their tax accountant and say, okay, what's more beneficial for you? With that being said, though, it's a conversation. A lot of these products do have loan minimums. I want to make everyone aware of, especially with DSCR loans. A lot of them are at least 100,000. Right. I'm going to say 90% of lenders. We do have some lenders that will go to 75. Some don't have any requirements, but anything underneath that, really under 75,000, it's going to be really difficult to find anybody that will do a DSCR loan. No ratio loans, pretty much a hard stop at 100 grand, right? You'd have to have a loan amount at least of 100 grand if it's a primary residence. Fix and flips, a little different. They go lower because obviously they're put, you might be purchasing for 40 grand and you might end up with 100 at the end, kind of stuff.
Again, you can use these for refinancing. You can use programs like these for investment purposes, and everywhere in between. There are lots of programs and options. So if you are looking at a deal for yourself, as a real estate professional, or you have clients that this may be a potential option for, we would love to chat. I'll drop Jordan's cell phone in the comment box here. He is a wizard when it comes to understanding these guidelines and how to navigate them. And in fact, the case study, Ryan as the case study, that wasn't originally how we were going to do that deal. I can't remember exactly the way we were going to, but how we did the deal is not how we started off thinking that was the way the transaction was going to close, we pivoted to using one of these no income, no employment programs. Or actually, Jordan, what we were going to finance the property, different property, and bought that one cash, right? Is that what we ended up
Correct.
doing?
Yeah, we ended up doing it because it's a lot easier on investment properties. You get more options. More options means more competitiveness is really what it is at the end of the day. So and reserve requirements, right? So thinking creatively a little bit on it too is we had a property he had that was moving to an investment property anyway.
Right.
So we pulled that out, used that as the reserves, and then turned around and bought a house cash. So he didn't have to put reserves up, didn't have to do anything with that, and it was a quicker process.
Right on. If you hopped on late, you're watching the recording, whatever the case may be, I want to show you. If you haven't already done so, go create your free account at wakeup.realestate. Totally free account. And then under lead capture tools, you can use this lead capture page. No income, no employment verification. It looks like this. And if you're logged into your account, you actually can't access it if you're not logged into your free account. Again, it's a free account. But if you use this, if you post this on social media, if you include this in an email blast or a text blast or whatever, if you use this and you have someone fill out this information, okay? They ask, Ryan does a wonderful job of getting people moving down a slippery slope. When they submit their information, you get notified. It's a new lead for you. You can have the initial conversation and then hand it off to us or whoever your mortgage team of choice is, or however you want to handle that. But this is one of many lead capture tools and pages, etc., that you get, again, 100% free at wakeup.realestate. There are scripts and templates. So yesterday was Texting Tuesday, and I shared 2 text scripts. These are the scripts that we are using this week to set appointments for ourselves and our V qualifier clients. I know Monday we set 14. I don't know what the total was yesterday. It was about the same. We're on average setting 10 to 15 phone appointments per day using the scripts and templates that you can find right here. And that's a perfect tie-in to what we are doing later this afternoon. We've kind of changed our programming and schedule last week. So Wednesday afternoons at 1 o'clock now, we are hopping on Zoom for anyone who's interested, and we are doing a mastermind workshop. So if you want to come hang out with us in the afternoon and see live in action, Mike and I generate or set appointments. Today we're going to be working in my database because last week we were working in one of our V qualifier clients database, and I didn't ask her ahead of time. And so I was kind of panicked because we had 8 or 9 or 10 sellers that wanted to have a chat with her, and she wasn't on. And so I was like, I hope she's not on vacation or like whatever. So we're going to do it in my database. And then we'll give you everything you need so that you can go do it yourself. And we'll even hang out there as you're having conversations, and we can help and collaborate and mastermind. Okay, how do I answer this question, or how do I pivot away from this? How do I do that? When do I pivot from the text conversation or the email exchange to setting an actual phone appointment or even in-person appointment? All of that, you can come on and hang out with us. Originally, Ryan was also going to be live setting up a new lead generation campaign on Facebook and Instagram. Ryan is down with the vid. He's not feeling so hot today. He and his son and his wife and daughter. I think only Sam in the family has avoided the virus at this point. But he's not feeling well. We'll do that next week. Hopefully he'll be fully recovered. But today we're just going to get to setting more appointments, and we'll start off the session by sharing some wins and doing some of that good stuff. But we're going to get into doing the work of setting appointments. Low, yes, that is at 1 Eastern, and you can register for that for free. There's no cost. We're just hopping on a Zoom. It is wakeup.realestate/MM. Wakeup.realestate /MM. And, maybe we'll even mastermind or brainstorm how you can use what we talked about today, no income or employment programs, to get you more clients, right? If nothing else, we want to make you aware of these programs so you can turn on your reticular activating system and find deals where maybe you didn't, they were right in plain sight, but you just, you weren't aware that it was even possible. I can tell you each and every week, and almost now on a daily basis, we're having conversations with consumers who had no idea that they could actually qualify for a mortgage. Had no idea, whether it was a limiting belief or they just, whatever. They weren't aware for one reason or another. Maybe it was because
we just closed one Monday.
Yeah, well, talk about that. Unpack
denied by 4 lenders. There's a lot of misconceptions about commission people needing a 2-year history to qualify, especially in the mortgage industry and in the real estate community, to where you need 2 years. You do need 2 years if you're 1099, not if you're W-2'd. There's car salespeople out there that are W-2'd. Almost all mortgage lenders are W-2'd. So you have to understand from a perspective of mortgage lenders misunderstanding that they're the ones that would qualify. I've done many home loans for mortgage lenders that didn't think they could, qualify, or guided people. So this guy was a car salesman, been in the job for 1 year, 2 months, denied by 2 other banks, and he closed with an FHA loan, right? So FHA and conventional both allow it. It just needs reasonable. I've done a mortician, denied mortician. I had to do a letter of explanation of why that business would keep going. Yep. But I guess they're paid commission. So in a mortician or embalmer. But I wrote that letter of why that job would continue, is that people will always continue to die. So it was a little morbid, but it got through. So
as dark as it is reality. Anyway, enough banter back and forth here. Join us at 1 if you're interested. You can check out the replay of this. If there's anything we can do for you on the mortgage front, or if you are someone, if you yourself or you're part of a team that over the last 12 months has done 30 or more transactions or 5 million in volume, we would love to chat with you about what we are doing with our V qualifier clients. Now, if you're under that threshold, you absolutely need to create a free account at wakeup.realestate and use the lead capture tools, the scripts, and the templates. And you need to come join us and hang out with us on Wednesdays at 1 so you can get to that point, so then we can collaborate and work more closely together. If you'd like to chat about any of that, you can just schedule a time with me at josh15.com, or you can call, text, email, private message, send a carrier pigeon. You can look me up. My address is all over the internet. Thanks, Jordan, for dropping some knowledge here today, some mortgage knowledge. And we'll see those of you who are interested later this afternoon. And otherwise, we'll see you all tomorrow.